Welcome to my channel. My name is Benjamin Poole, one of the head traders at Verified Investing. I'm just playing around with a little whisk. That's why that intro video is there. And you'll notice that my exit video at the bottom, it's really difficult to edit the text in something like AI. And so there were some words that don't quite make sense. I'm just playing around with it to see what sticks. Anyway, today I kind of wanted to talk to you about trading IQ. I was coaching my daughter's softball game yesterday. I have a 10-year-old daughter. She plays softball, and a lot of time when I'm coaching my daughter's team, you'll have the shortstop and you'll have the second baseman. When the play's going on, they're not really doing a whole lot. Even if the ball is hit to shortstop, the second baseman doesn't really know what to do. The pitcher doesn't really know what to do afterwards. And then you've got the outfielders who are just kind of standing around wishing that they were playing part of the infield, because in AAA, that's where most of the action happens. So the ball goes to shortstop. The shortstop will throw it to first base. If it's an overthrow, what does the right fielder do? That kind of goes along with IQ. So baseball or softball IQ is anticipating what the next move is going to be. Where's the ball going to be? Where are the runners at? This whole combination of events that can occur, and how are you going to react in that moment when those things happen? So I was going over that with the infielders and the outfielders, explaining to them kind of what you do in those situations to help develop their IQ. And so then I assigned them specific tasks. So the person who was on shortstop, I said, now you are responsible for all the people who play shortstop. You need to tell them when the ball is thrown from the catcher to the pitcher, that shortstop needs to be backing up, and hoping that you get to play or take action on that play. That's the IQ that goes into it. When a pitcher is throwing the ball, or the catcher is throwing the ball from home plate all the way to second because a girl's stealing, you need to be then covering second base, or you need to be backing up, anticipating the next move that's going to happen. So that way you can be ready to go, and if and when something does occur, and that helps you develop your IQ. And I did the same thing for the second baseman. I said, okay, when the ball is thrown from home plate, you're going to go cover second base and potentially tag the runner out. Then if the runner isn't scoring, if there's no runner on first base and you're throwing it from the catcher to the pitcher, you also need to be backing up just in case it goes on to the other side of the pitcher. So that way you can scoop up the ball and make sure no other runners go. And then I did the same thing with the third baseman and then the outfielders. So that way everybody had an idea of what to do next. So my question to you would be, what is your trading IQ? How far have you dove into the chart that you're looking at to see where the next level of either support or resistance is? And where are you going to be putting your ads or your stop losses on a particular trade? So what I'm going to do is I'm going to go over a couple different scenarios. In NVIDIA, I went over in the video yesterday. In SanDisk, I didn't go in yesterday, but a couple days ago, and I mentioned that there's a potential resistance level. I want to see where your IQ is, and I'll show you where I'm at currently in these particular trades. Okay, so the first one I'm going to go over is NVIDIA. The first chart of NVIDIA, I had mentioned in yesterday's video that there's going to be a lot of support right here at $182.19. This doesn't mean that I'm going to put my entire portfolio in it. However, this is going to be a day trade. I tried to get in this trade in the live day trading room here at Verified Investing. However, that didn't happen because my setup wasn't set up correctly. It was like me not having my shoes tied. I thought everything was set up correctly. My microphone was on, but I had to restart my computer a couple different times. So that was me fumbling the ball, making an error. So my IQ this morning was off. I didn't have everything set up. I didn't anticipate having to try to adjust my headset, adjust my computer, and make sure that the people in the live day trading room could follow along. I fumbled the ball. I created an error, and that actually cost me money. In the future, what I'm going to do instead is make sure that my mic is working and my computer is completely set up. So that way I'm ready to go and my IQ can be elevated. And then I can react react to the trade instead of actually trying to react to the circumstances that are happening now. Can't always anticipate everything, but it's best to try to get conditioned to anticipate the things before they're going to happen. So what happened on NVIDIA? My entry point was this gap fill at $182.16 or 19 cents. I missed the trade by literally seconds. I could have taken about a $2 gain, and I was going to use 1/5 of my portfolio. Overall, it would have been a 2,000 gain for the live day trading room, and I fumbled that. Now, if you would have gotten into that trade, you got to know, where are you going to take profits? Are you going to wait and let it run? And if you're going to do that because it's into a lot of support, where would you add? So here's where the price action of NVIDIA got to. It got down right below $179 before this really big rip to the upside. It caught support at this red bar candle a little bit, flushed that because the markets were selling off. It wasn't just NVIDIA, it was AMD, it was SanDisk, it was pretty much everything. The S&P 500 and the QQQ were all pushing this down. If that happens, what do you do? Do you stop out of the trade? Because that can be something that you do. It's almost like getting a ball hit to second base, fumbling a little bit, and then throwing it back to the pitcher. So that way the runners don't advance anymore. In this situation, if you would have stopped out, you could have looked for additional support levels. So Gareth actually got into this trade at $180. That's a guy in the live day trading room that most of you guys know. $179 Pierce is where he entered the trade. And so that could have been an opportunity for you to also get into the trade if you were looking forward in the charts to see where the next support level was going to be. And it was this red bar candle. Sometimes it can be really scary when the markets are continuing to flush. Sometimes you just got to trust your charts, trust your IQ, and know that you know what you're doing. Now, look at what happened. It went from $179 and got over a $10 or an $8 bounce. And then in the post market, it's now trading up back close to $190. So what's your next move? Are you going to short this? And if so, where would you short it? For me, I'm looking at this chart and noticing that there's this huge gap fill at $206. I would be looking for a move back up to this level, $206.84 for a re-entry on a short. The nice thing about entering here is you have an opportunity to stop out at a close on a daily closing basis above $211. This would be your next pivot. If it does take out this level, it's likely to run a little bit higher. Now, let's go into the next chart, which is SanDisk. SanDisk put in a daily topping tail yesterday. I'm going to show you how a pro trader sets up, executes the trade, and then potentially stops out of the trade if your thesis or the pattern changed. So SanDisk right here, look at this topping tail. Not only is the RSI overbought, so it's extended on the upside, so it's above 70 in an overbought condition. It's up into a lot of resistance. The difference is yesterday it sold off and then it had earnings today. No, sorry, it had earnings yesterday. So the earnings report came out today. It flushed out and went negative slightly. And then towards the end of the day, all these buyers stepped up. A couple different situations could have happened. So you have this gap, this topping tail. How you would play this. You have this topping tail on a daily time frame. Without news, this is a good reversal candle. With earnings, you got to play it a little bit differently. Where's your IQ at? Are you getting into a trade as soon as that topping tail hits? If you would have gotten into this trade as soon as the topping tail hits, you would have gotten at $207. Look at how far you would be out of the money right now, 15%. So a pro trader, what they do is they actually wait 3 days after a topping tail is, after earnings come out. So that way they can see what price action is going to do, even if there is a topping tail. And the reason is we don't know what the buyers or sellers are really going to do. We don't know what the analysts are going to do. The institutions, We don't know what's going on until after about 3 days settles in, after the euphoria in the markets or the panic sell comes in, then we can make a decision. So a pro trader waits 3 days. If you're not a pro trader and you were looking to get in, you would have actually waited. Let's say there was no news on this. You would have waited to get in at $215.84. So let's see what the difference is. Let's reset this. $218.36. This is the Fibonacci retracement. And that's what you'd be looking for on a technical basis for a pro trader. Instead of getting in here, where a lot of retail investors do, they get in as soon as the topping tail commences, you're automatically 5% of the money. So if you can get the price at a 5% higher level, then I would recommend doing that. And the nice thing about a topping tail is any close on a daily closing basis above this high pivot negates the topping tail, and that is a good stop out point. You could even do it a little bit earlier if you see that it's a continual float throughout the rest of the day or throughout the morning and into the afternoon session. That's your stop out level on a daily closing basis. I wouldn't have gotten into this trade at this level. I wouldn't have even waited for $218, even though there's a topping tail. If in the live day trading room, we stayed away from this. The first level I was going to enter this is 230. And as you can see, that's above this topping tail. That is where my entry point was because it's a key psychological level, even with a potential topping tail. Now, had you gotten in at this level and stopped out at a close above, you would still be out of the money. But look at the price action. Instead of being 15% of the money, you're still out of the money, but instead you're 9% of the money. So you're saving yourself 5% on this particular trade. In 3 days, if something changes in the markets, if we get a sell-off, or in SanDisk, if we get this nice sell-off, then we could look at where the next support level is for a potential buy, or on the back of earnings after 3 days, if it continues higher, I would actually look for around the $250, maybe even $260 level. Sometimes these stocks can stay elevated for an extended period of time, and that's why I would wait for those couple days. So I guess it goes back to my last question. Where is your IQ? What are you anticipating? Are you looking at the news? Are you looking at the potential earnings reports? Are you looking at your next ad level? Okay, let's say you did get in at $226.50 at the pivot top. Where are your ad levels? Are you adding every $5? Are you adding every $10? What is it for you? And I guess that's just something for you to think about. The more you can dive into the charts, the more you can anticipate what the potential stock's going to do, the better of a trader you can be, and the more you're going to start trusting yourself. Okay, that's what I have for you. Thank you again for watching. Thanks for subscribing. If you guys have any comments, please leave them in the chat. I will be happy to respond to those. If you guys have any chart setups that you want me to take a look at, like I said in the last video, I may have time to do it as long as it's a stock that's got some volatility and it's kind of a popular stock. I wouldn't mind going over it with you. And we'll see you guys next time in the charts. And don't pay any attention to my outro. It's the words at the bottom are a little messed up, but that's all right. Here we go. All right, take care.